Alright, what's up guys? I hope you're doing well. James here from jamesforsythe.com. Wanted to go a little bit over kind of the US dollar status as a global reserve currency, mostly by going over some of Jerome Powell's own remarks at a recent research conference, it seems, that was actually sponsored by the Federal Reserve Board. And the title of it was International Roles of the US Dollar. And this is kind of more of a introduction in a way because through this I was able to find a much larger and more extensive body of research and webpage for the actual role of it with graphs and charts and everything. So this is more of an intro, and then next will be kind of a more longer format uh, with actual charts and stuff like my preference, and I'm sure your guys' is as well. So essentially, part of the reason why the dollar has global reserve currency status, not only just because of Bretton Woods, which is arguable to a certain extent of whether or not that system is really still here. Um, I've seen some arguments for it. Um, where I'm kind of going with that is kind of the transformation, I guess, in a way, of the Bretton Woods system and how it kind of rather quickly fell apart and went into, say, the Eurodollar system from that kind of point of view. Then there's also kind of the more, I'd assume, mainstream argument from what I've noticed, to where it's like, um, okay, so you have kind of two, to be more explicit, to follow my line of thinking. So essentially, you have kind of two main pathways that are argued for the US dollar, right? And so you have Bretton Woods, which is kind of the meeting point where they're both the same. And where they branch off is you have one kind of going the euro dollar route to where it was, I think, in the 1950s specifically, where the euro dollar system was kind of germinating, and then that's the route we went. So there's one argument for that path. And then there's the other one to where it kind of goes the opposite, or not opposite, is not the good way to put it. To where you had go from Bretton Woods until like the 1970s when we went kind of the OPEC route, I guess we'll say, towards kind of the US dollar was essentially backed by oil with the whole was it I'm pretty sure it was Nixon talking to the Saudis and essentially don't remember if that's where they created OPEC or what, but essentially they went to them and backed the US dollar by oil. It's been quite a minute since I've gone through the nuances of that, so I'm a bit fuzzy on it at the moment, but that kind of general route, right? But either way, um, is you can't argue that the US dollar isn't the world reserve currency, at least as of the moment, right? And so he describes this global kind of prominence in a way, and that it's supported due to the depth and liquidity of the US's financial markets and the economy, and also attributes it to its stability and openness to trade and capital flows and international trust in US institutions and the rule of law, right? Which compared to other countries, I mean, you have to think about it in the form of pretty much everything with this kind of general topic, or I guess almost everything to a certain extent. It's all a relative game. So you have to continuously answer the questions like, compared to what? It's like, how are you doing compared to what? Right? What's the price of something doing compared to what? Whatever. Right? So kind of going that route, so to speak. And I listened to an interesting podcast, and I don't remember exactly who was being interviewed. It may have been Rick Rule, but I'm not 100% sure, to be honest. Um, but essentially, he was dealing with some foreign hedge fund person, right? Basically, I don't know if he was interviewing him or whatever, but he was asking, like, why do you have such a significant uh, allocation to U.S. debt, like U.S. Treasuries? And he was started asking about like, it's credit, whatever. And so it's like, it's essentially a lie, is how he was doing it. So basically it's like, you could just not pay him. And he was like, yes, but yours is a deep and liquid lie, right? And so it's one of those with financial markets in the United States being so, from my understanding, it's basically the largest in the world. And everyone seems to invest in US, especially like stock and equity and debt markets in a way. Um, and sorry, I'm gonna stop going down some rabbit hole and continue on. Um, because obviously I need to look into that more. But yeah. Anyways, the US is big. So basically some of the benefits he gives for this is the United States, for like the United States itself, this kind of reserve currency status, some of the benefits of it is he says they have lower transaction fees and borrowing costs for US households, businesses and government. And then basically this helps contain like uncertainty and the cost of hedging for households or businesses. I mean, that's one thing that you kind of notice. Like if you talk to kind of retail investors, they don't worry about hedging like currency risk all too much unless they're specifically dealing with foreign assets to some extent, right? If they're doing purely domestic plays, I mean, I don't think I've ever heard them talking about hedging with respect to foreign entities or currencies, whatever, right? Because they don't need to. Currency risk isn't really a major aspect of it in general, and we're excluding high inflation at the moment, right? That's not really what I'm talking about. Obviously, it's going to be slightly different when you're talking about a debasement of a currency, separate concept, um, in a way, I guess. Um, but now specific to, say, foreign entities, the wide use of the dollar allows borrowers to have access to a broad pool of lenders and investors, which reduces their funding and transaction costs. And so I think that's part of the reason why you see the majority of global debt is denominated in dollars. And that's part of the reason, and one of the arguments for the dollar not using or not losing um, its reserve currency status is the fact that one, the network effect that it has throughout like the euro dollar system as a whole, and just its sheer size and prominence throughout the global economy as well, and specifically through its debt, I believe, to where it's more like, countries are taking loans out um, denominated in dollars because of lower interest rates, or at least they have been, right, relative to their own currencies. And so that's where you're kind of having these arbitrage plays between debt denominated in US dollars by foreign entities, who then but their cash flows are denominated in their local currency. And so that's also part of the reason why the dollar increasing so significantly on, say, the DXY, um, is a big problem for them because basically it's becoming more and more difficult for them to service their dollar denominated debt because their cash flows are denominated in their own local currency. And so essentially they're getting squeezed that way as well. Um, at least that's one of the arguments I've been looking more into, specifically with the Dixie getting above 108, I believe, in the past week or so, as of this recording, right? So to continue, the Federal Reserve's strong commitment to our price stability mandate contributes to the widespread confidence in the U.S. dollars as a store of value. Okay. A CPI of 9.1 might make that arguable, at least from a domestic standpoint. But it's also like relative to, say, other currencies, specifically like the euro and the Japanese yuan right now, or sorry, yen. Um, anyways, Japanese yen. uh, to where the currencies, I'm pretty sure that's why the Dixie is going so high up as well. It's not necessarily that the dollar is increasing relative to, say, the Brazilian real or other currencies like that. It's more of the weakness in, I think the argument that I heard was essentially it's not so much dollar strength, it's more of the weakness of specifically like the euro and the yen, to where those are more, especially the euro, because that's I think it's over half of the Dixie, but I'm not 100% sure. Something along those lines, right? And so, but because of this, and he does bring up inflation, since I did talk about the CPI, um, basically he says the widespread confidence in the dollar as a store of value, and then he continues with, to that end, my colleagues and I being Jerome Powell, are acutely focused on the returning inflation to our 2% objective, right? And they really don't want inflation expectations to become unanchored for obvious reasons, because then you're not only battling the economic causes and so on, or supply shocks, whatever argument you want to give for inflation itself, you'll also have to deal with the psychology of society in general. And that's when it gets much more difficult to rein it in. And that's your kind of your, so to speak, inflation genie, I believe, right? To where it's like once you get them out of the bottle, you can't get them back in, sort of thing, right? And so dual mandate, whatever. So the Fed's commitment to both our dual mandate and financial stability encourages the international community to hold U.S. dollars. Okay, I mean, I don't really have a comment on that sentence specifically. Um, to be honest, I haven't really looked into like how their dual mandate affects specifically international entities, or not internet, foreign entities, I should say. Um, However, that does mean, especially with the global reserve currency status of the dollar, I mean, swap lines are a thing, right? And so the central bank liquidity swap lines provide foreign central banks with the capacity to deliver U.S. dollar funding to institutions in their jurisdiction, right? And this includes, or not includes, but another entity similar is the Foreign and International Monetary Authority's FIMA Repo Facility, which allows approved FIMA account holders to the option to temporarily exchange their U.S. Treasury securities held by the Federal Reserve for U.S. dollars. So essentially, just foreign entities can also um, participate in repo with the Federal Reserve as a counterparty. So at least that's how I understand the sentence. Um, and both of these entities are basically just to serve as he says, liquidity backstops for those foreign entities, because the dollar is a global reserve currency, and so you can't. It doesn't really. The whole argument of that's their problem is no longer really applicable because the dollar is the global reserve currency. And so it's kind of like, if essentially major players in the rest of the world go into deep recession or have a major currency crisis, then it kind of is our problem because we have an international economy now for the most part, right? We spent all this time kind of sending stuff overseas in a way in terms of like we're outsourcing, right? The United States was kind of outsourcing the production of goods, and so we import a lot. And I believe that that's kind of backed up by the fact that imports for um, the United States have been, I think, all-time highs, but I haven't gone through that report specifically. That's more of just like data I think I've heard on multiple podcasts, so to speak. Um, so we don't have a chart or something for that. But yeah, so that's pretty much it. Um, yep. And then basically these swap lines, he continues on with those for a minute. They were extensively used during the GFC, the 2011 Euro area debt crisis, and then also in March 2020 with the pandemic. And then in light of the tremendous growth in crypto assets and stablecoins, the Federal Reserve is examining whether a CBDC, um, a U.S. central bank digital currency, would improve on an already safe, efficient domestic payment system, as the Fed's white paper on this topic notes. It continues, and I actually see, yeah, I actually have gone through the specific paper he's referencing, and so there are 4 or 5 videos on here on this channel that go over this specific PDF in depth. So I can link the playlist to that in the description, so you guys can get to that if you wish. You can also just follow the link and read it yourself. I also put those in every video, so I'm very anal about sourcing. Um, Maybe it's just because of my background, but yeah. Anyways, you always kind of this the talk of a U.S. central bank digital currency is becoming more and more prominent, um, to where it seems like every speech I go through now, done by some member of the Fed, whether it be Chairman Powell or another member of the FOMC or even a Reserve Bank president, seems to almost always have some comment about a central bank digital currency, which is part of the reason why I've been going more in depth and actually studying it and going through some of the reports and stuff. So like I also have multiple videos and I'm producing more on the actual reports done by there's a collection of different central banks for the entire world. So like the central bank for Switzerland, the Bank of Japan, the Bank of England, um, and a few other central banks for major developed economies, and also I think the BIS was a part of that as well. Obviously, not a central bank for a country or some specific sovereign, but yeah. So those are on there as well. Um, definitely, definitely an interesting dynamic. So, like I said, the next one will probably be. I will definitely go more into the role of the dollar as a global reserve currency, kind of giving you guys actual charts and comparisons and things like that. You know, like how big is that discrepancy between basically the dollar and every other currency in general? I'm giving specific numbers and charts and things like that. So that'll be in there as well as future videos on going more in depth into central bank digital currencies, just because I don't know, it's interesting. But anyways, and it also seems like it could there's a decent probability of seeing it in the future, especially with how much research they're doing about it. But either way, I'm gonna leave it there. So I hope you guys have a good night, and I'll see you on the next one.